call the meeting to order. This is the Wednesday, December 1st, 2021 meeting of the JRIB. Time is 7:01. I'm going to call it to order. We're going to quickly approve the minutes from the regular meeting of October 27th. Give you a moment to take a look at those minutes, and someone would like to make a motion to approve when you're ready.
Hello.
Hi, who joined us?
Carolyn, it's Jack.
Jack, are you making the motion?
Yeah, I'll make a motion to approve the minutes.
Do we have a second, please?
I'll second, Carolyn.
Thank you. All in favor? Say aye.
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 Great. Do we have any abstain?
I have a revision. I'm sorry, Carolyn.
Pardon?
I have a revision.
Oh, revision. Okay. Brenda, I think you're muted.
I'm not sure if I was at that meeting.
Yeah, I don't think you were.
Okay, I'll abstain then. Thank you.
Okay. Eric, revision?
Well,
yeah, under section 4, it talks about where Millman is currently only using 2 companies. I believe in the discussion it was 2 communities and 1 water district.
Okay. Chris, are you able to reflect those changes?
Yes, you got it.
Okay. All right.
Mm-hmm.
So in that case, with revision, we'll kind of revote. All in favor? Aye. Aye.
Aye.
Brenda,
Aye.
you will abstain. Any other abstentions? Any objections? Okay. There we go. Everyone, welcome to the annual meeting of 2021. Happy December. Can't believe we're here and we're still on WebEx, but looks like we might be here for some time, given the progression of our new variant for the pandemic. I'm sorry we're not in person to share some good treats that Eric usually brings for the December meeting. I do want to thank Scott Pollock. You're here. I do want to congratulate you and thank you. We were hoping to have you in person so we could toast you with our apple cider. Everyone, I just want to give a fond farewell to Scott. And Scott, you don't have to stay.
I don't? Then you won't have a quorum.
No, I can't count you in the quorum.
Ron, Scott.
I just want to say it's been a pleasure to serve with all of you, especially some of you who I've been on the board with all along. So good luck to all of you, and I'm sure you'll do a great job running it.
Thank you very much. Stay in touch.
Okay. Thank you.
Thank you, Scott.
Thanks,
See you, Scott.
Nice guy.
All right. I am going to turn the meeting over here to our first selectwoman, Brenda Kupchik, to take it from here to call for the nominations for the officers of the JRIB for the upcoming year. All yours.
Thank you, Carolyn. I'm going to open up the floor for nominations for chairperson. Jared?
I would like to nominate Carolyn Trabucco.
Thank you. Do we have a second?
I second.
And Chris, you have this, you see?
I'm working on it, yep.
Okay. That was Sue. Okay. Okay, thank you. Is there any other nominations? Seeing none? All in favor? Aye.
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 Motion passes unanimously. Congratulations, Carolyn.
Thank you. Thank you, guys. Thank you very much.
And I would just like to just say I personally appreciate your hard work and effort as chairwoman of this board. You've done a very good job since you've stepped up, and I know Jared really enjoys working with you, and he tells me how interested you are and how hard you work and how much effort you put in. So on behalf of the town, thank you very much.
Thank you. Thank you. My pleasure. And it's been a great year working with everyone. And it's been a great year. It's been a great year performance-wise. Thank you. Brenda, would you like to continue the honors?
You're the chairwoman, I think. You want to? I'm happy to do it. Okay, so I'm going to open up the floor for nominations for vice chair.
Okay. I'd like to make a nomination. I'd like to nominate Eric Newman for vice chair.
I'll second that
And
motion.
second, Eric Caliper. Are there any other nominations from the floor? Seeing none. All in favor? Aye.
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 Motion carries unanimously. Congratulations, Eric. Going to open up the floor for nominations for secretary.
I'd like to make a nomination for Eric Caliper to be secretary of the JRIB.
Is there a second? Jared seconds. If there's no other nominations, all in favor? Aye.
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 Motion carries unanimously. Congratulations.
Thank you. Brenda, you did that beautifully. Thank you.
Carolyn, before we go on, there's two people on the phone. Could they identify themselves?
Yeah, Nick Caruso.
That's what I'm missing. And Jack Mahoney. Okay, I'm
Jack
good.
Mahoney.
Yep, I'm good.
Yep, Jack's here.
All right. Fabulous. Guys, thank you. Great. Let's go forward here. Let's talk about the conflict of interest forms. They're here on the agenda, just so I didn't forget to mention it. We have to each make sure you fill it out. It was in your packet that was sent to you by Chris. If you could please fill it out and email it back to her, that would be appreciated. The adoption of the 2022 meeting calendar is up next. That's in your packet as well. That's item number 5. We have a very predictable pattern here on the JRIB that we meet the fourth Wednesday of every month, with 2 exceptions. We don't have a meeting in August, and we don't have a meeting in November. Instead, we combine our meetings with November and December into one. So I think I counted correctly with putting the calendar together. I'd ask if you all kind of take a look over that and check my math, which I think is good. And when you're ready, I'd ask for a motion.
Eric Caliper, I'll make a motion that we accept the 2022 proposed meeting schedule as presented.
I apologize, Eric. I didn't get there quick enough to unmute. We had talked about the last meeting about potentially changing that. So what is the process if we want to? We talked about having more meetings while we kind of go through this process, this middle-in process a little bit, but then maybe cutting down to quarterly meetings. So if we adopt this schedule as is now and we decide in July that we want to switch to quarterly, are we locked into this calendar for the year?
I don't believe so. No, I think we can change it. This is for the notice for the town clerk to make sure the town calendar. And as always, we can call special meetings with 5 days notice. But if we want to change the meetings, there's a way to do that.
Okay, I'm good.
Okay, do we have a second?
I'll second.
Okay. All in favor of adopting the calendar as presented, say aye.
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 Any abstentions? Opposed? All right, motion carries unanimously. All right, moving forward. We are now ready to do the performance review. Brian Binkley, sorry we're not in person. Thank you for being here with us this evening. I'm guessing we need to share your screen. Are you still unable to share your screen with us?
Yeah, it's more. It's not technical. It's more security-wise from the Vanguard standpoint. So thank you for someone doing the honors of sharing the presentation.
Anyone?
In the meantime, I hope you all had a good Thanksgiving and spent time with family and ate too much.
For it. Had it up just a minute ago.
I'm glad we got our in-person meeting in over the summer when we did.
Seriously. Share.
I have it up, Caroline, if you want me to share mine.
You want to do it? Do you mind, Eric?
I'll give it a shot. We'll see what happens.
All right. Thank you.
Thanks, Eric. see it coming up.
Beautiful. Stand by.
There it is.
Is that big enough?
Perfect. Yes.
All right.
So before I even get started, we can go straight to the performance side. Before I get started, I always like to remind everyone, just jump in at any time as I'm going along. If there's a delay, I'll answer any questions or get to anything that you want to cover. As I typically do, I'll just review the markets just here on a year-to-date basis. This is calendar year. And then when we get to the performance for the two plans, we have your fiscal year-to-date numbers on that piece. So I'll start here. Looking at the year-to-date numbers, besides some volatility we've had the last couple of days, this is all as of the end of October. And as of the end of October, the markets were still hitting fresh highs, year-to-date, record highs. And really, that's in the U.S. You could see the U.S. is up over 22%, really driven by strong earnings. At the end of the third quarter, coming from our investment team, 80% of the S&P beat their targets, their estimates by an average of 10%. And even in this inflationary environment, operating margins were really strong and ahead of expectations. So companies are able to pass through any kind of cost increases. So due to strong earnings and strong margins, that and really still in a low interest rate environment, that's really continued to propel at least the U.S. market forward. Right next to it on the year-to-date basis, you see non-U.S. stocks up, but not nearly as much as the U.S. Part of that is due to China. China's in the emerging markets. China's been weak year-to-date as the country's kind of trying to clamp down on real estate speculation and transition the economy away from kind of debt binges, and even crack down on some internet companies. So big weakness or more of a weakness in emerging markets, mainly due to China. On the right-hand side or the center of the page, all fixed income is really, whether it's U.S. fixed income, U.S. bonds or non-U.S. bonds, all down or negative. And that's really due to rates increasing throughout the year. So just on a year-to-date basis, the 10-year Treasury is kind of a benchmark for, what's happening with rates. And I'll come to that in just a moment. It's up about 62 basis points on a year-to-date basis through October. So that inverse relationship pertains, and so negative returns from fixed income. Just a quick blurb on that. Fixed income still plays a role within the portfolio to serve as that ballast or that protection in down markets. So it'll still play a critical role in portfolios. And really, higher rates, if we get there, rates have come off lately, will be good for investors over the longer term. So we really want to see higher rates. We'll have some pressure in the short term, but better returns because most of the returns come from income and fixed income. So if you go to the next page, Eric, this is just showing kind of what I was alluding to, just the yield curve across different maturities. The blue line is where we are at the end of October. The red line at the bottom is where we were a year ago. So you could see how, at least on a year-to-date or 1 year basis, across almost all maturities, the rates are higher, and that's what's pressured the fixed income returns on the previous page. And then on the next page is showing the different segments of the fixed income market, whether it's treasuries or investment grade. Even investment grade bonds are down. The only part of the fixed income market that's really up is high yield. We don't hold that in the portfolio. High yield tends to behave a little bit more like equities when you get big pullbacks in the market. So it doesn't really serve to protect your portfolio in times of stress. And we've even seen that lately. You see it's a high yield up 4.4% through October. That's been halved in the last couple of weeks. So the next page will bring us straight to the pension performance. We'll start there. Just looking at a fiscal year to date, still positive and carrying the strong momentum. So you see the fiscal year-to-date returns up over 3%. That's ahead of the benchmark, mainly due to the private equity returns, which have been really strong. And then right next to it on a one-year basis, you could see that continued strong absolute and relative return up 25%, and that's about 3% more than the benchmark of 22%. Right below that is the where we are with the current asset allocation versus the policy targets, and I'll hit on two things. One is we've agreed in the previous meetings to increase the private equity target to 10%, but that'll take some time. It'll take years to build to that. So when you see the current number in there for private equity of 7%, that's over the old target of 5%, really due to the strong returns in private equity. But I wanted to put a little footnote to remind the committee that the new target is 10%, and it'll take several years to build to that new allocation. All of the private equity paperwork for the Vanguard HarborVest Fund information is done. We expect the first capital call in a couple of weeks, and I'll work with Jared and or Caitlin on that. I'll stay on private equity for just a moment. I know there were some questions before where that final fund raise was, and so for that 2021 private equity fund through HarborVest, the total raised for the year was $530 million. So to give you a sense of what that final commitment was.
Thank you for sharing that. Just that we were going back and forth. It didn't seem prudent for us to invest at a position that would have us be more than 10% of the total fund, and so with a $500 million raise, that puts us very comfortably from a percentage of that fund. So,
right. Yeah, about 7%. Mm-hmm. And I do know anecdotally there were a couple of institutions that came in at a higher amounts. Not that it's a competition anyway, but just to give you a sense, you wouldn't be even the largest investor.
Thank you.
So just wanted to update the committee on that. And then just reflecting on cash flows, we use cash flows to rebalance to the policy targets you see on the slide. We did have, money movement. We always have pension payments that go out. For the month of October, that was about, it's usually in the range of $2.7 million. We had some private equity distributions, returned capital from our Mesereau in Lexington. That amounted to about $798,000 in distributions that we got in October, and there were no capital calls in October. I can just give you an update. In November, in November we've had over $1 million in distributions from the private equity partners, so we're getting more return there. And there was one call during the month of November, $380,000. So when we're constantly raising money for pension payments or getting these distributions, we always rebalance to the policy targets you see on the center of the page. So if you go to the next slide, Eric, this is just looking at the funds. Not a lot of updates intra-quarter because we don't get the values for private equity in real estate until on the lag. But I'll just touch on a few things. On the fiscal year-to-date side, you see the Vanguard Total Stock Market Index. That's up over 6%. And you see the Total International Stock Index. That's been negative, and that's the last 4 months, negative 0.43. But very close. Both of these always track their indices pretty closely. On the fixed income side, it is just that 4-month period of the fiscal year to date, and you see the muted returns for fixed income, whether it's U.S., the Total Bond Market Index, just up 9 basis points, but international fixed income down 49 basis points. The private equity returns, they're from the second quarter, so they're still lagged, no change from the last time. But if you're just looking, you could see that that's been the best asset class on a fiscal year-to-date basis. And then on the next page, besides the individual funds, real estate, and I'll give you a quick update. This real estate return of 3.94, it's also as of the second quarter, but we consider real estate as part of your risk reducing bucket. And so that allocation to that asset class has helped absolute returns as far as you saw on the previous page, muted returns for fixed income. So the real estate allocation has been helpful. I've gotten some preliminary numbers through the third quarter from Principal, and the real estate market in general continues to recover. So just some preliminary numbers is that the Principal fund was up over 6% in the third quarter. So as those segments of the market continue to return, the strong ones have been multifamily or industrial properties, still some weakness in retail, and so I'll get into that more when we wrap up the full year. But I just wanted to give you the updates I have from Principal. Eric, that'll bring us to the Opec Plan. It's just up slight. There we go. Go back one. This is just a summary. From a fiscal year-to-date basis, of absolute return of 3.1%. Slightly more equity exposure here. We don't have the private equity exposure yet, but that's why it's slightly higher than the pension return of 3.06. But all the other comments pertain to the other asset classes, U.S., non-U.S. equity, fixed income, and real estate. And no cash flows there of late. What I included just in the last section, just something different. We often talk about and we often share, at least on an annual basis, our forward-looking projections for all the asset classes. We have capital market forecasts for all the asset classes. So if I have you skip forward to page 16. Thanks, Eric. So what this slide is showing is, well, how have Vanguard's forecasts done? And we review this periodically. And so let me explain the chart on the right-hand side. Is that greenish line kind of in the middle, those are the actual returns. This is for a 60-40 portfolio, not the Towns portfolio. You could see the allocations to the four major asset classes kind of to the right of this chart. But the gray band, or let's start with the dotted line, that was our forecast from 10 years ago for a 60-40 portfolio. And the gray lines is just the 25th or the 75th percentile. So that's the median expected return. That was our forecast. So for instance, if you look at 2019, that was our Vanguard's forecast for a 60-40 portfolio 10 years prior. And then that greenish line was the actual performance. And what this shows is that pretty much that our return forecasts were within that 25th to 75th percentile. Never going to be right on top of the median, but that's why we always provide a distribution of returns. So having a balanced and a diversified portfolio been pretty accurate as far as where those forecasts have been. And those forecasts, while they change slowly from quarter to quarter, they do change, over time. So if you looked at 10 years ago in 2019, we were just coming out of the global financial crisis, the return expectation for a 60-40 portfolio was closer to that 8%. Now, if you look forward our 10-year forecast to say out to 2031, that return for a 60-40 portfolio is in that, it's hard to say, but 5% range.
Brian, is that due to underperformance of the fixed income or future anticipated lesser performance of equity?
Mainly, it's both. So mainly lower expected returns from equities, just because of how strong the equity markets have been the last 10, 12 years, and reflecting the fact that we're still in a very low interest rate environment, so we're not getting much from fixed income. So it's a combination of both of those factors. And that's what's driven public plans, but also corporate plans to lower their discount rates over time. So have you seen that come down?
Yeah. So, all right. So I would be really afraid if I saw this chart, except for the fact that we just posted, a 20, almost 30% year.
Right.
Right. And so you're looking. This is a very long-term view, right?
It's a 10-year view, right?
So obviously, we're going to have some. It's highly unlikely we're going to repeat the performance year we had this last fiscal year.
Right.
But it's an interesting look at. Are you suggesting to your clients that they begin to think about changing their portfolios in a way to try to position themselves to either one way or another?
Not drastic changes, Carolyn. So one is for looking further out for any kind of actuarial assumptions, for public or corporate plans, we do use a 30-year outlook. So the returns are a bit higher. But this is on a 10-year look. The other main takeaways, and we've kind of talked about this, is you've seen more institutions move towards the alternatives, such as private equity or private real estate, to get additional returns. I'd say that's the most meaningful asset allocation change that plan sponsors have been doing in general. And I come to it in just a moment, is, it's hard to advocate going more into equities where valuations are. I'll show you how we look at the fair value of the market. But that, with respect to that, there's not many big changes, just being more, prudent as far as what to expect from the portfolio. We've pulled so much of those gains forward the last 10 or 12 years. Just anecdotally, really far out the risk curve, a public plan like CalPERS in California, they're borrowing. They're borrowing money to try to get excess returns. I think that's pretty aggressive out on the risk spectrum to borrow money to try to hit your return target of 6.75 or 7%. But the biggest piece is the allocation to alternatives, and you see some of these bigger public plans actually adding leverage into their plan. And we certainly don't advocate for that. We don't do that with any of our clients. So I think it's more of just setting realistic expectations is the bottom line, Carolyn. And we can continue to look at different things or different opportunities as they arise. If you go to the next page, our asset class forecasts are not always perfect when it comes to the individual asset classes. So where we've been wrong the last 10 years is U.S. equities have performed much better than we've thought over the last 10 years. So on the left-hand chart, you see that green line was certainly exceeded our expectations. We just saw very strong earnings growth from a lot of companies. And the one that jumps out is, of course, the tech companies, right? So investment technology is a bigger part of the U.S. market than it is of the overseas markets. And given how dominant some of those tech companies are and how big they are in the indices, the returns have been really strong. So the flip side, it goes to the right-hand side, is so our international markets performed worse than our overall portfolio, than our expectations. So it was the flip side. But given that we believe in having both of those asset classes or diversified portfolio, that brought, that's that first slide of, generally we're pretty good in that forecast, pretty reasonable returns of the forecasting. And then I'll leave it on page 18. This is just looking at, the valuations of the equity market. And I'll explain some of the metrics here on the right-hand side. Often you'll hear price to earnings ratios, right? 12, whether it's historical or 12 months forward. But a big measure that's used within the industry, or you've probably read about in papers or hear in the news, is something that's referred to CAPE. That was a measure by Professor Schiller in Yale in Connecticut. So he came up with a cyclically adjusted price earnings ratio. And it was just trying to smooth earnings over a 10-year period, so you're not getting a lot of noise from year to year. And so a lot of market pundits, look at that CAPE measure of where the equity valuations are. So if we look at that chart, you see in the dot-com bubble, that green line really jumped up. And, that in hindsight, of course, was a bubble. Remember all those great companies like Pets.com. But the dashed line in this graph, that was over this time period, is the average price to earnings ratio. And then that you see that CAPE ratio really jumped up. So let me explain the last kind of metric on this graph, which is the gray shaded line. And that's what we refer to as, this is Vanguard's measure of what we think is the fair value cyclically adjusted PE ratio. And what our research has shown is that when interest rates and inflation are really low, as they have been the last 10 years, valuations, they're inversely correlated. So valuations can stay richer in that environment of low interest rates and low inflation. So meaning investors are willing to pay more for a dollar of earnings because they're certainly not getting it in the fixed income markets. But even as of late, that green line has moved outside of what we would consider fair value. So nothing like we saw back in the early 2000s, but as that last bullet on the left-hand side shows, as of August, the equity markets were about 24% what we would consider the fair value range.
What market is this that we're looking at?
This is the total U.S. stock market. So just the equity U.S. stock market.
All U.S. publicly traded stocks.
Correct.
Okay. All right. Well, thank you for.
Yeah, and oh, sorry, I thought there was one more page on page 19. This is just looking forward. Something we've talked about before is I talked about where were we wrong historically, but looking out to 10 years, our expectation is that international equities will outperform U.S. equities by about 3%. The right-hand side is, well, why is that? And so if we look at our forecast for U.S. returns, that's that first column, about 4%. But the valuations overseas, just because of what I showed, how much U.S. has outperformed, the valuation multiples for overseas are much cheaper. So we think there'll be a valuation lift for international markets that would add about 1.5%. We're not really forecasting higher earnings growth overseas. You can see it's a negative 0.7%. Overseas companies tend to pay a higher dividend yield, and then we think there'll be some minor depreciation of the dollar over the next 10 years. And so that's what's getting to our forecast of higher returns for international markets. So Carolyn, coming to your question, it doesn't really pertain to the Fairfield plan because we have a 60-40 split between U.S. and international equities, but for certain plans that maybe were very low or had no international exposure, that certainly has been something that we've been recommending to clients that had a low or no allocation to international equities. But the pension plan, the OPEC plan are pretty well diversified there.
Your counsel to us at this point is that the allocations we have are still suitable and appropriate for the fund?
Correct.
Anyone have any questions? All right, sleepy crowd. That was good. It was really thorough.
Okay.
I have a zillion questions, but I'll take them offline. But they're much more market oriented. Too many years as an equity analyst.
I'd love to field them. So yeah, I'll look for your email.
Take them offline. But thank you for this, and thank you for acquainting us to the markets too, and kind of where you're at.
Sure, my pleasure. Yeah, I'll stay on, of course.
Yeah.
Okay.
All right. Excellent.
Thanks, Eric.
All right, guys. Terrific. It's all right. Moving right along, guys. We're going to move on to item number 7, which is titled on the agenda "Plan Administration Discussion with Potential Action." So, if you want, as a refresher, this was the request that we had, and the conversation that we had about moving the administration of the pension out of the full-time equivalent managed internally at Town Hall, and looking at an partially outsourced, partially automated system with Milliman. And as you recall, we've been working on this over the past couple of months. We assembled both Eric Califer and Chris Brand to do additional diligence on it from a get an understanding who the clients are who are currently on the system, and get a sense about pricing. I think I would really like to turn this over to Eric and to Chris to just kind of give us a wrap-up of what they found, and I think their recommendations. Eric?
Okay, thank you, Carolyn. I think that the month that we took to talk to the 2 municipalities and 1 regional water authority was well needed. 1 municipality is currently only using what they call the MARC service, which is just a web porthole only for the municipal administrators to access data within Millman. They are currently not using any web porthole nor a phone call center, and their cost for just accessing the web porthole to get financial data is approximately about $30,000 a year. A second community, larger than us, a city in Fairfield County, is also using Millman, and they're currently onboarding the entire Millman service. That has to do with the porthole, the call center, and they're very, very close to executing. They're having weekly meetings. It sounds like that their cost structure is pretty much in the ballpark of what was quoted us. And I think that they're very, very close and ready to load up and push out their data on the site so that employees and unions and administrators can go on and verify the information before they roll it out. The next one was a regional water authority, and they're currently using the full service, and they're happy with the level of service. Again, the 3 people that I spoke to were from the administrative level, not from the user level. But I think at this point, Chris and I, we both recommend moving forward with this solution. We think it would be good for the town and town employees, more importantly. The only thing that I do have to bring to the attention of the board, just from a business standpoint, is I think our current benefits manager makes just over about $100,000 a year, and I would assume that her FTE units that basically are performing this function are probably about 1/4 to 0.2. So when you look at the cost of doing this, it is a little expensive, but it sounds like it would help human resources with some personnel transitions. And I think the only thing that we really need to be in touch with is just making sure, I think Chris, I don't want to speak for Chris, but I think he agrees with me, is just making sure that the user, the pensioner, whether it's the retiree, the widow, gets good service, gets accurate service, and then when the service is not good or accurate, there's someplace to go to make sure that things don't go awry. The only other thing that I did notice was that one of the administrative services that we had asked Millman to possibly take on would be rewriting the summary plan document. And I think if we're going to have Millman do that, I just want to make sure that comes back before the board for approval. And I think because that's where that power lies, and that's going to be a heavy lift. I just want to make sure that that's something that the board agrees with. And then it's probably going to take 9 months for Millman to totally onboard this thing and get it up and running. So I think that I'm going to let Chris speak, but I recommend we move forward with this and just realize those caveats that I mentioned.
I echo everything that Eric said. I think I do have the concern, and I think it's as part of the planning process, I would like to make sure it's clearly defined what the policy and the plan will be if someone does encounter an issue. Where is the town going to pick up some support, and who will be our advocate on the town side to make sure that we've got that's whoever becomes in that role or whatever the HR department looks like, that there's still someone kind of designated that, while it might not be explicit in their job, but that would be their role to kind of be that bridge. And I don't know if that's Jim or if that's the new person or whatever you guys are going to do, but I do. Again, I think Milliman can handle this. I think they'll do very good. It'll bring us up into a new age. I think it'll be a level of service that we haven't seen. No disrespect to Cheryl or anyone else, but it's just, I think it's kind of the next step in our evolution here. But there is that human touch, and there is a percentage of our users that might be put off by this. And I do want to have a successful transition to them. And so that's my concern.
Chris, maybe we can ask Jared to address the town's perspective. He's been doing a lot of work on our behalf.
Can I just make one comment? Working at the library, I totally agree with there will be a lot of people who do not want to do things online. I personally would love this service, but there are a lot of people of a certain age who don't want to do anything online. They want people to do it for them. So I'm not saying yes or no either way. I'm just saying there will be, I feel, a lot of people who are taken aback by this.
In our discussions, I think with Milliman, at least especially, I do think they recognize that as definitely a barrier for some people. And again, I think that's something that we can definitely stress in the transition, and that and monitor closely as that, I think, or have us as the board and as the town make sure that they monitor that closely, and then we can re-educate both on the Millman side or our side, before it gets too big. And if it becomes a larger problem, then I think we'll have to deal with it. But yes, I totally understand that.
And if I can jump on with what Chris says, and just to verify, I totally understand what you're saying, Susan, and I think that that's going to be really important for those widows and those pensioners that are currently maybe a little bit older in age and don't have the technology or the ability to do that. And I think that one thing that's really going to be important here is that if this does not work out, if this is not successful, and it doesn't work for us, we want to make sure that, human resources will take this task back on. So I think that's what Chris was kind of mentioning, to make sure that, the benefits manager, whoever that person is still going to have a role in this and be able to absorb this if it does not work out with Millman, or if we choose a different actuary in a couple of years because, we just have to go out to bid, or we just choose that we don't no longer want to have Millman, and not every actuary firm is going to provide all these services. So we need to have that exit off the highway in case we need to move back the platform to risk management, human resources.
And there will be that transition time. Again, like I said, I think 9 months is kind of their ramp up. So there's still going to be a time between, then and then when that there still will be a link between the two.
Jared?
Thank you. So this is a big move, and we're ready to make the move. I talked to Jim Hazelkamp at length about this, and he's willing to and is comfortable with accepting this as a year-long sort of trial. And if, to your point, if it doesn't work out, then we're going to do what's best for the retirees. And if we find that it's going south, then we'll have to. He'll be prepared to transition back. So just to hit that, the first point of contact for the retirees is going to be the HR department. So there's going to be somebody there to accept that and to at least to be that point of contact and direct them to the resources at Milliman, so that they can find their way around that system well enough. And there is, just to address the concern about the technology and the hesitance of older people to get to so, still technology, but a much more, not developed, but a much more accepted and something that people are comfortable with. And so that is an option as well, a backup as well. And again, the HR department's not going away. There will be people there to assist with those initial contacts, and also if there are problems with Milliman, they'll be there to act as a conduit between the person and Milliman. And again, if that's not working and that doesn't suffice, then after a period of time, then there would be a transition back to it. I do think that this is the best option for us by far, just because of the continuity that it provides to us. Because as we're going through now, you guys are seeing it. Jim has spoken about it. Brenda has spoken about it. This is a tough situation that we're dealing with now, and trying to hire new people and get qualified people is not an easy thing to do it once. And then, when you think you have somebody who's qualified, they come in, and maybe it doesn't work out. Then you need to get somebody else in. And so what I like about this system is it provides us with, gives us the confidence and gives us the continuity that we need. Thanks to their system and the employees that they have. I did want to address one thing that you mentioned, Eric, about the summary plan documents. I don't know where it stands, but I do know that Jim had reached out to an attorney at one point because we don't really have those documents. And so I'm not sure how far he got in those conversations, but I would want to talk to him first to find out exactly where that stands, and figure out how that would fit into this. I don't think that's a deal breaker, and we'll figure something out on that end. But I also don't want to duplicate effort, and if he has put significant time into it, to know that a portion of that has been done.
So I thank you for that. Brenda, did you want to comment at all or anything? I mean, I feel like
no. Thank you, Carolyn. I'm happy that the board is moving in this direction. Obviously, our town has been through a tremendous amount of sort of crisis that happened over the last several years, and I have put a tremendous amount of strain on the HR department based on my reorganization and modernization efforts for our town to deliver top-level services for our community. And frankly, it's a lot. The HR department manages over 400 employees, current employees who work for the town of Fairfield. It is a tremendous amount of work, contracts and negotiations and benefits and everything that comes into that department. It is a tremendous amount. So the retirees are a whole nother piece of it that are a large point. And frankly, I think this is the best way for us to go. Having to, in my opinion, upstaff the HR department to handle the retirees would be a very big expense. Cheryl's done an admirable job, but frankly, there was a lot of other things over the years that I've learned over the last 2 years that were not taken care of because of the pressure on the HR department. And of course, I put a little bit more pressure on because I wanted to shake it up and do different things. So I think this is the right thing to do. I'm glad that the board is moving in this direction. I think it is appropriate that the pension board handle this function. It is very, it's important. And I think you monitor it, right? over the period of time to see what happens, how it works, and how we can add, if we need to add adjustments to it, we can do that as a board. But I think this is definitely the right thing, not just for the town, not for the HR department, but for the retirees, as Eric was mentioning. You know, they need a lot of assistance, and it's a lot. It's a lot. So with 400, we're not a small organization. We're a very large organization. And so there's a lot of needs every single day from current employees. And I think that having it split out, having direct, attention for retiree people, that is the right way to go. So I'm fully supportive of this, and I appreciate the board taking the time to do the research and bringing this up this evening.
Would anyone else like to make a comment? Personally, I'm really excited about this. I'm really happy to be able to do this. I think that there will be a transition time. I think it might be a little lumpy at points, and we're going to have to do our best as a town to accommodate people who are unfamiliar or less comfortable with the transition. We always want to be sensitive to that. We're here for them and for the plan members and the retirees and the pensioners. But I'm really excited to be able to modernize this. I get some phone calls too about, how difficult it is. So, my 2 cents is I'm very happy for the diligence that the board has done, and I'm looking forward to seeing this transition happen. Would anyone else like to speak up? I know we've got people on the phone. Jared?
Yeah, I just want to say one more thing, and that's thanks to Chris and to Eric for doing the due diligence and in a thoughtful and sincere way, and greatly appreciate it. And I really hope everybody will support this.
Okay, not hearing any other voices coming through.
One thing I'd say is, initially, yeah, it's going to be a learning curve for some people, but over time, once people are shown how it is, whether you're a current employee or retiree, depending on where you are in your life stage, the very more senior people will probably never say go on to it, but to have that transparency and, but then they will obviously know the system very well, where you get the individual like that. Help them is needs a lot of the strength that will get onto the system. They'll have the transparency of seeing where the retirement numbers are. They don't have to wait on reaching out to HR where I'm considering retiring this year themselves. More of either time to do it, what they can do in privacy with their own spouses or partners, and making different decisions. So I think it will be good.
All right, guys.
So is there a vote that we need to officially take on this?
Absolutely, is a vote we need to do. Jared, are you muted?
Yes, I'm sorry. I said I'll make the motion to approve this and to approve as it was presented by Millman.
So the motion being that the board is motioning to hire Milliman as the pension administrator for the town of Fairfield. Did I get that right?
That's right. For the
pension administrator for the town of Fairfield.
Yep.
Okay, thank you. And Jared motioned. Thank you.
Yep. I'll second the motion. And with that, all in favor? Anyone in favor? Raise your hand. Say aye.
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 Do we have any opposed? Okay. Abstention? Nope. Motion carries unanimously. There we go. All right. Super excited, guys. Thank you. Thank you for the work on this, too. I think this is a big step forward for the town. I'm really happy to see that.
I would assume, Carolyn, at some point we'd have maybe a subcommittee that would be part of a transition, and I definitely want to be a member.
Oh, Chris, that transition committee's got your name all over it.
All right.
Yes, absolutely. Brenda's muted. Brenda, we can't hear you.
It said no good deed goes unpunished. He volunteered.
Never turn down a good volunteer.
I'll continue on it too.
Thank you, Eric. Great, you guys. Awesome. All right, let's move forward. CFL report, Jared. How do you top that? Get us some good news.
I'm not going to try. I sent you the report earlier today, which includes all 4 of the accounts. Don't know if you had a chance to look at it. I can share my screen if you'd like. Second. All right. So this is a quarter plus 1, 4 months through October. I'll just hit on a few of these things that may not be so self-explanatory, but the town employer contribution is essentially our ADEC for each of the accounts that goes into the account. The cash transfers in. What that is the as I went through in previous CFO reports, there are transfers that are made from the funds account into each of the individual accounts the money sits there for a short period of time before it goes. That's the source of the money for the actual pension payment. So that's what that line represents. That's the dollar amount that goes into the account, and then when you work your way down to the bottom portion, you can see that a large portion of it goes out as under uses of cash as payments to participants and initial benefits, as well as the tax liability. I mean, that's the bulk of the report. Are those items. The rest are fairly small. There's an investment management fee for Vanguard. There is the cash and transfers out.
Way. I went to the court pages today, and it's a whole new level of transparency for us, and to be able to see it efficiently laid out in one spot.
I have to thank Connie for doing that. Connie's the one who's putting this together. And so we'll continue to do this. If you see something that a way that it could be better, let me know.
Jared, I just want a question. So the town contribution and the employee contributions only come in quarterly? I just was surprised it's kind of just in one.
The employer contributions?
Yeah.
Yeah. Actually, that is going to be the only one. It's a one-shot deal.
Oh, it's a one-shot deal.
Yeah, that's what you'll see, and that'll be the entire year. We put the cash actually goes into the account in September. Yeah.
And September just because of?
I don't know the answer. I know it's been like that since I got here. I think it's just tradition, history. And obviously the sooner that we get it in there, the sooner we could have that invested and gaining interest. So making money for us. So.
Hey, Jared, Eric Caliper here. When I was reviewing the cash flow statement, I don't see employee contributions, both the town employees or the police fire. And the other thing I don't see the employee contributions for the OPEB for police fire either. Nor do I see the contributions to the OPEB account.
That's a good question.
Maybe we just missed them here?
Yeah, I'm trying to come up with a good explanation for that. I'm sorry to do so, but let me go back and find out. I don't know if it didn't get transferred and the source of this data.
I don't know when for the catch-up, right, so when the BOF decided not to make the full contribution into OPEB, and then I believe that they did a catch-up vote. I don't know where that is either, so.
Right. Now, it could be that for OPEB, the timing may not be the same for the employer contribution. But let me get answers to that, and I'll get them for you probably tomorrow. Any other questions?
All right, Jared, you got some homework.
Yep.
I've not seen kind of reporting out like this, at least in the couple of years I've been on the board. So we'll keep getting it closer, right?
Yep.
Report. All right, if I can take us forward, guys. Item 9, old business. Not necessarily old. Listen, I'm a big believer that you got to celebrate when you can celebrate, and so I'm happy to share with you that our fiscal year end filings were prepared, our Gatsby report, and well, we all recognize that this is a moment in time. Okay, it's a moment in time. It was June 30, 2021. It was one day. It's like taking a picture of a balance sheet, right? I do want you to know that the funded status of our plans was 96%. So, congratulations. Hey, Jared, you can take your share screen down.
Yeah.
And so we all know, we're grown-ups here, we're the pension board, we all know all the assets are still exposed to the market. Okay, we didn't take it down, put it up in a plaque on the wall. But you celebrate when you can celebrate. And it was a really remarkable performance here. And I'm really I was overjoyed when I saw what that number looked like. So well done, guys. Great job, team. Brian, Finkley, great job. Vanguard, great job.
That's great results. I mean, no, I think that is important to celebrate. And, all the work that goes into it and setting, committees work and time. Yeah, that's great.
Now, of course, the math.
If I could.
Yeah, sure.
So the last year, if you remember, it got mentioned a few times what this measure was, and it was about 78% funded. And so now it's going up to 97%. To me, it just reinforces the fact that we need we got to be cautious about what this number is, and this is a volatile number, and this is why we have had H&H. We'll have Milliman looking at these things on an actuarial basis, so that we're not subject to the volatility, with their ADEC and everything. So.
Yep. The business of the board goes on. Right? The business of the board goes on. The ADEC is going to be a smooth number. You don't get the full benefit of the 1-year performance return in good years or in bad years. So, it will be what it will be. But, it was a nice snapshot in time. Right? And so we'll just leave that there. Is there any other old business anyone wants to bring to the table? Okay. If not on new business, I do want to share with you that Tom McCarthy has resigned from the JRIB and the board, and he called me over the weekend. I guess he is going to be moving to another board. We're really sad to leave him. He was great to work with. Wish him the best sorry he's not here for us to kind of wish him that in person. I asked him to join, but he had a conflict tonight. So I do just want to let you know and inform you of that. And I'm sure we will shortly be receiving two very great candidates and new members of the JRIB as it works through the various process to join us. But we have two openings, one on the town side and one on the police and fire side. Okay. Any other new business? All right. With that, at 8:07, could I ask for a motion to adjourn? All right, Jared. All right. Second. All right, everyone. Thank you very much.
Happy holidays, everyone.
Happy holidays.
Merry
Thank
Christmas.
Happy holidays.
Your happy Hanukkah.
Thanks,
Enjoy.
Bye all.
Thank you.
All the best.
Have a good evening.